chillax and waste my time with tokens. I'm going to get no value, and they're going to get my IP.
The fear for all these CEOs is that when your company uses these models, your data flows through them, right? Your process, your trade secrets, the special sauce that makes you profitable, which Alex Karp calls the alpha. So what happens when the AI company that you use learns from your business? It just becomes your competitor. And this is not a hypothetical thing, by the way. Anthropic launched a design product called Claude Design while having a relationship with a company called Figma, which is a design company. Figma's CEO publicly said he was shocked. So picture being a business and then watching that. You're paying your vendor millions of dollars a year to use their AI, but what you're actually doing is paying them and training your own replacement. So what's the solution then? This is where it gets really interesting.
But what is happening among the most technical players is they're saying, I want something I own. This is my business. I want to own the GPUs. I want to own my data. I want to own the model. I want to control the alpha. Why would they get access to my data if they're going to build my alpha? Why wouldn't I control the weights?
Right. What that means is instead of renting an AI from someone, instead you just download one, you run it on your own computers using your own data where no one can see it and no one can learn from it. And also no one can shut it off. He then goes on to say, though, that most businesses don't even need the latest and greatest cutting edge AI because you don't need the smartest one to process insurance claims, right? You need one that's specifically really good at insurance claims. And what's interesting is that Alex Karp profits from this business model as well. So why would he be saying all this? What's his motive? Because remember, France, Germany, Spain, they're canceling their contracts. Palantir has been losing those contracts across Europe all year. Now, 2 days before that interview, Palantir announced a partnership with Nvidia to sell open models in sovereign environments. Basically, that interview was a product launch for his new service, which is why he's out there telling other companies to download and own their own AI. So that is the first problem with AI. Nobody trusts it. But there's a second problem that's even bigger. Now, before I explain the second problem, everything in this video, like the AI spending and whether this is a bubble at all, depends completely on where you're reading it. And that's where today's sponsor, Ground News, comes in. Ground News is an app that shows you the same story from hundreds of different outlets at the same time, and it tells you which ones are left-leaning, right-leaning, or center, so you can see how the story changes depending on the source. Perfect example, South Korea just announced a huge national AI and chip investment. Over 159 news sources covered it. And here's what Ground News shows. Left-leaning outlets frame this as a historic industrial strategy, stressing the huge scale, and they lead with the market's outcome. Right-leaning outlets lean into the urgency and survival, using phrases like race against time, framing it as existential for South Korea's chip industry. Now, center outlets just skip the drama and focus on policy execution. Even the headline number changes depending on the source. Some report 1,000 trillion won, others up to 2,000 trillion, some just say 1.2 trillion. But it's the same announcement with 3 different narratives. That's what Ground News makes visible. I use it when I'm researching for these videos so I can separate what's actually happening from how it's being told. If you want to see the full picture of global events and not just one side, go to ground.news/Jikh or click the link down below. You'll get 40% off the Vantage plan, which is the one I use, and you'll be supporting independent journalism and this channel. Thank you to Ground News for sponsoring this segment, and now let's get back to it. Now, the second problem with AI is that even if every company in America trusted these AI companies, the money still does not make sense because the business model is broken in a way we've never seen from tech companies. Because here's how software is supposed to make money. Software is the greatest business model ever invented because you spend a lot of money building the thing at once, right? And then every new customer is basically free money. That's why tech stocks have done so well over the past few decades. When you buy Microsoft Excel, right? Microsoft doesn't spend anything extra to sell you that copy. Their costs stay the same, but their revenue goes up. And it's the gap between those two lines that is their profit. And that gap is why tech companies are the most valuable companies on earth. Now, AI broke that model. And how they broke it was every single time you ask ChatGPT a question right now, it costs OpenAI money because it uses electricity. Chips are being worn down. So more customers does not translate to free money anymore. More customers means more cost dollar for dollar. So AI is not a software business. It's more like a restaurant, right? Every time a meal gets served, somebody has to buy the ingredients every time. Except this is a restaurant that loses money every time it serves food, and its plan to fix it is to serve more food. Now, let me give you some context. In 2025, OpenAI burned over $20 billion in just 1 year.
Well, they'd be the first to be this bad other than WeWork, and even then, this is so much worse than that. OpenAI burned $20.9 billion in 2025. That's the audited financials that the FT&I reported. And the problem with these companies is their margins are getting worse, and their costs increase linearly with their revenues.
So he's basically saying that costs increase linearly with revenues, right? The two lines are going up together, and the gap never really opens up. Now, for 25 years, every investor has been trained to be patient with this because they say, well, they're losing money now, right? But at scale, their margins will get better, right? Amazon lost money for years. Except with AI, we just keep on waiting and the margins are getting worse because every new model costs more to run than the last one. And the market is starting to notice it.
There is no proof that they can improve their margins. No amount of specialist silicon or supposed Vera Rubins will bring these costs down. And we're at a point now where OpenAI is now potentially pushing their IPO to 2027 because they couldn't get $1 trillion valuation. It's clear that people are wising up to the problem of generative AI, which is there's not really a business there.
Now, all of this, by the way, is not just OpenAI. Because look at who's paying to build all of this. This is from Oracle's annual report.
Oracle is a particularly scary one because they are building 7.1 gigawatts of capacity just for one customer. And they even said in their annual report that the risk was they might not get paid. OpenAI only loses money. And I think I estimate it's like $75 billion of revenue annually that they will have to pay for the full Stargate data center project in annual compute revenue. OpenAI can't afford that. And if they can't, Larry Ellison can't afford to pay back those bills, and Oracle's stock will be in jeopardy along with the margin loans that Mr. Ellison holds. It's genuinely dangerous.
So Oracle is building the equivalent of several nuclear power plants worth of electricity for basically one customer. A customer that just lost $20 billion. Here's my favorite one though. Nvidia sells its chips to a group of smaller cloud companies. They're called neoclouds. Now those companies borrow billions of dollars to buy Nvidia's chips, and Nvidia rents them back.
I think companies like CoreWeave and especially Nebius and IRN and Cypher Mining and all of them, TeraWulf as well, they're basically outgrowths and they're subsidiaries of Nvidia. Nvidia is now, according to the information, going to be paying them to rent back their GPUs when they install them in the data center. This is something that only happens in an industry without diverse and real demand.
So what he's saying there is that Nvidia's sales are partially funded by Nvidia. That's like a car dealership lending you money to buy a car and then paying you to borrow the car back for the weekend and then reporting all of it as demand. Now look how much profit we're making, right? Yeah, because you are buying back your own equipment. There's a name for when an industry starts doing this. It's called not enough real customers. So for companies investing trillions in AI like Microsoft, Google, Amazon, Meta, what is the ROI from all their spending? They won't tell you. These companies report everything: cloud revenue, ad revenue, YouTube revenue. But AI revenue, they're not telling us that.
Microsoft, Google, and Meta and Amazon are all doing a funny little, I don't want to call it a scam, but it's a trick where because their other businesses are still growing, but they never disclose their AI revenues, everyone conflates that with AI driving their growth. In reality, their other businesses are growing and AI is losing them money across the board. You'll notice that neither Microsoft or Amazon, who both share their run rate of AI, will share the actual AI revenues. That tells you that these companies are afraid. Public companies love good news. If they had good news, why wouldn't they share it? That's because they've only got bad news here.
Now, as of right now, the stock market is still patient and investors are saying, okay, give it time still. But all of it really depends on one big assumption, which is that if and when the profits do come, it's going to be the American companies that will make the profits, because the world has no other option. But the third problem with AI is that the world has another option. That option is called China. So let me show you what China is really doing. Remember this chart from the beginning of the video, the $1 trillion that America's spending. Well, here's something interesting. This is China. On that same scale, America, $764 billion this year, and then $1 trillion next year, 3% of the whole US economy. China, $102 billion this year, $123 billion next year, 0.6% of their economy, which means America's outspending China almost 10 to 1. Why? It's because China figured something out. A developer took the exact same coding task and gave it to two AI models, Claude Opus, which is one of the top American models made by Anthropic, and GLM, which is a Chinese open model. Both models finished the same task and both took about 5.5 minutes. The American model charged $2.33 and the Chinese model charged 31 cents. That's 7.5 times cheaper. Now, before you think that that's a cherry-picked test, here is the industry-wide data. This is called the Artificial Analysis Intelligence Index, and this is basically the official rankings of every AI model in the world.